Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, February the 18th, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Real brief overview. Wave one is over as long as price remains below 114.72. We're in the process of stair-stepping lower, which we believe our destination two will occur somewhere about a 78.6% retracement, which is roughly around 80. That comes from the bottom back in 2007, which we talked about us grinding up in this destination one years in advance to get up between 115 and 120. We did that. Now I believe we're in the process of reversing. This will take years, as we've already started topping and reversing a few years already, a couple of years and counting. I do think it's probably several more years before we get down here. Why do we spend so much time on the dollar index? Because wherever the dollar index is headed, we can anticipate with a great degree of where a lot of other asset classes are headed. So we reached this 618 retracement, which we're struggling to break above. That was no surprise. I had this on the chart. This 109 will remain bearish. I put that on the chart years ago. And sure enough, we chopped around here, finally tested it, and we're getting rejected. So let's jump into the charting platform. And as we can see here, we expected that once we got this big swing up here, we got a high, we got a low, we got a lower high, we got a lower low. Weeks ago, I said we were much more likely going to grind down toward the magic Fibbo line, and that's where we're headed. So this little bounce we're getting, I would not expect this to mount to anything. I suspect we're going to see another lower high, lower low as we grind down toward this magic Fibbo line. We talked about going long the euro dollar and the pound dollar during that period for inverse relationship. And sure enough, as the dollar is grinding up, or in this case, the dollar is grinding down toward its magic Fibbo line, the euro is grinding up toward its magic Fibbo line. So over the last several weeks, when the daily reversed, we talked about buying that dip, and then any dips until we get up to this point at least, we should be looking at buying dips because the dollar is likely going to continue to fall toward its magic Fibbo, as the euro is likely going to continue to grind up toward its magic Fibbo line. The pound dollar is doing the same. It's almost there. So we talked about this hundreds and hundreds of pips ago, that as the dollar would break down toward its magic Fibbo, the pound and the euro are going to grind up toward their magic Fibbo. And sure enough, we're almost there. So could this go higher? Sure. I'm not getting real bullish on the dollar as far as pound dollar and euro dollar in the short term, because once we get up here, we're probably going to get another pullback. And I don't mean necessarily pullback to a new low, but I'm going to watch this major battle zone and see if we get up here, Alan, then we come back down and retest it, then go higher. When I get real bullish is when we start breaking above 129.44 area. Then we go way bullish for another several hundreds of pips up to 136, 138 level would be our high probability target thereafter. but this is still a ways to go. Not only do we need to continue to go higher, but we got to go a few hundred more pips higher and get a daily candle body, not a wick, but a body close above this 129.50 area. I'd like to clear this little hurdle right there, right around that 130 area, but it's very close because we've been stair stepping, and this is a extreme zone. So between 129.50 and 130, that is a critical level that once we close above, say 130, then it's game on. 600 pips, 800 pips, and that could continue even going up to 142. So where do we get these levels? From the prior high to the prior low. We want to see us break above that 618. That's the critical zone. And sure, it's possible we could grind up there, get rejected, and then we move back down. So this is why first things first, take your profits here. If we do break above and start closing above this 129, 130 swing point right there, then it is game on. This will be a new entry at whatever point we get here. If you're in it from down here and you're maintaining, great. I suggested that we take some aggressive profits when we get up here because we're probably going to get another pullback. The question is, from this low, when we reach the magic Fibbo line, do we then do a 618 retracement? So it's possible in this upward motion that we're bottoming, and even if we come up here, we get another 618 retracement, then we continue higher, and eventually we start closing above that little swing point, and then this is an entry. If I see us close above this 130 area on a daily candle, not a wick, but a candle body, then I'm all about going long to 136, which is my extension up there. So let me just compress that a little bit. There's the extension, 136, 138. This would be 75% chance we're going to hit this. 70 plus, we're going to hit that. Once we close above what? That swing point, say 130. It would also include closing above my 618 and that major swing point that we tested. It was former support over here. Resistance, resistance, resistance. So that's why sometimes I like to see a close above the 618. But if there's a major battle zone looming just slightly above it, I like to see it take that out as well. Then it is game on. So this worked out beautifully. I still think there's more upside before we finally reach up here. And again, if this is the bottom reversal and we're busting out to new highs, great. Then we're going to see this come into play. We're going to close above this 129. We're going to break that 130. And then it is all onward and upward we go. Now, we talk about this on Tuesdays with Gary's market forecast all the time, and that is looking at our wave counts. I still think that there's a very good chance that this euro might be over. We still got a ways to prove it to make sure before it's too early to call. So I guarantee this is the end. We do have a low, we do have a high, we do have a higher low, and we're just about to get the higher high, price pattern reversal. But this is where it needed to go from the prior swing point low a couple of years back when we hit this 0.95. I was very adamant. This is a great opportunity to go long. You're going to make thousands of pips. Even if this thing just goes up to even come lower, it would be worth your interest if you would like to trade the euro dollar. Well, now we got a 618 retracement. Beautiful retracement to 102. Go back years ago when we were talking about this looks like a 1 and a 2 as we're going up. And then I said, well, maybe this 2 isn't finished here. We might shift over here. And if we do, we're likely going to go down to 102. Years in advance. Well, that's the magic Fibbo line. That's where these levels come in. I don't just lick my finger, stick it in the air and go, okay, where's price going to find support if we end up breaking further down? And sure enough, this hit the 618 retracement. So this might be the end. Think about it. If our prognosis is for the euro to make a retracement up into the 140 area, 140, 145, kind of what we're thinking. Before then, we reverse back down. And this is going to take years to get up there. That if this is the case, and this is where we're headed, then we should see some stair stepping in here, obviously. But you frequently will get 618 retracements during that policy period. And not always do you hit a 618, but frequently in an uptrend, you do get 618 retracements. And in downtrends, you get 618 retracements from highs to lows and a continuation. So this is why I'm very bullish that we hit this target, which is fine, and that could still keep us going up. When did we start to look to the downside? We started breaking below that 786. Then it opens the door to go lower than this low over here. We didn't do that. We're bouncing off of that. So far, so good. Now, that's why I'm saying it's too early to call. So that's why we go to the charting platform and we talk about that. So in order to call that, the euro, just like I said with the pound a minute ago, from the prior high to this low, we need to take about this 108 and change. And then we got that same kind of swing point, form a resistance over here, support there, and then a big resistance here. So we really need to take out 108 and change, but I'd like to see us close above, say, 109 and change for that swing point, which is a major battle zone, right? So if we can close, get this rally to continue, and not only do we keep stair stepping up here, but we eventually break above the magic fibbo, come back, retest it, start breaking up, and we start closing above 109 and change, then it is game on. 113.60, basically 114 and change, almost 115 up here, 114.95. So that's a high probability if we can close above this swing point. In the short term, we said this is a good opportunity to climb a few hundred pips as the dollar collapses toward its magic fibbo. The euro and the pound, we're going to navigate toward its magic fibbo. Fair enough? So I'm going to continue to buy the dips till we get up here. I'm going to take a little bit of profit. If we then do this low up to the high where this is kind of holding, where I think we're headed, then we want to watch this 103 area to see that, okay, is this just a rally to the fibbo? We get a little 618 retracement for a continuation. That's what I'm looking for. So this is why I said when we get up here, take profits because we're probably going to get another pullback. The question is it a pullback to higher low, higher high scenario? And we ultimately start taking this 109 and change out? Well, there you have it. That's a 450 pip move and a 500 plus pip move as we start moving and break these levels. That's where I definitely think we're ultimately headed, is well above 113, 114. Remember, the target is way up here about 140. Yes, it's years away, but that's kind of what we're thinking and where we're headed long term. So in closing, going back to the original dollar index, if this works as we anticipate over the coming years, this breaks down toward 80 or lower, then there's no ifs, no buts, no ands, no exceptions. This euro is going to grind up toward this 140, 145 area, period. So I've been long ever since down here. I was short for years. Those of you that have been with us for a long time, majority of our subscription base has been with us for a decade and longer. So from the beginning, we talked about this going down to parity and below. And there were some big swings in here, but what did this thing finally do? And at the time when I was talking about this, I couldn't say, well, it's going to be 15 years later, you're going to get down to parity and below. But I was short for a very long time. And then I said, we need to go long. And again, this long does not include this thing continuing to ultimately break out to new highs. That's why I show you the wave counts, turn by turn GPS coordinates. So I do believe we're going to get up here and then we're going to come right back down. Well, this could take a few more years to get up here. And depending if this tops out in 26, 27, 28, when do we finally get up here? Then we might talk about when we come back down towards 2029, 2030, maybe 2031, we'll be back down in this area. So long term is big picture and turn by turn GPS coordinates, but that's why we always talk about Elliott wave. So what is happening with the euro, in my humble opinion, is this A going up in this B. And what happens when you get a B? We're going to come back down in a C. So I don't want to bore you with this. So why are you so bullish to go up here? Because that's thousands more pips. And then we'll have thousands of pips coming back down. All right. But one thing I don't think this A and turning in is that's going to go breaking all-time highs up here. I don't see that. I do see this nice retracement area. Fair enough. And if this is correct and the dollar grinds down, just like ultimately we were spot on this, could we be spot on this one? I don't always get it right. Nobody does. But I just tend to get it right a lot of the times. God-given talent and just reading, interpreting price on a chart. So if we do break down toward this 80 or lower, then what does that mean for the pound dollar? No ifs, no buts, no ands, no exception. The pound's going to grind up here somewhere between that 160 and 170 level. So somewhere about 165 is what I'm thinking, kind of split the difference. So that's still thousands of pips. And yes, it'll probably take a few more years to get up there. And we talk about drawing the Picasso. This is on a monthly chart, but I anticipate this is ultimately going to go slingshotting higher. This is going to turn back up. And then as we go through the months and year plus to come, we're even going to start this slingshot phenomenon where we just slingshot higher and higher and higher while the pound just continues to climb. And no, we're not talking about breaking a new high up here, but we're just talking about a beautiful 618 base retracement. Amen? So keep buying the dips long term. Well, some traders can't comprehend that. What does that mean? Years. It's like, I don't care about that. I want to know what's going to do today, much less tomorrow and next week. Well, we peg this with the software and talking about when's a good time to buy some dips based on this. And that was the beginning of this bounce. This latest bounce is when the daily cycled. And I told you, set it in advance where you set your trade manager to buy the trigger. When we get oversold, you get these triggers, and the system will automatically enter the trade if you put it in ready to trade mode. So this thing has made hundreds and hundreds of pips. Look at where we came from the entry down here, about 121 and change, and we went up to 126 and change. That's 500 pips. Kind of like what I was telling you. We're likely going to go at least test the magic Fibbo. There it is. Boom. So do we think we're going to go higher? Yeah, I still think we're going to go a bit higher. And more importantly, we have what we call the hook and the cross phenomenon. When a time frame like this example, the weekly PAI hooked, that's the price action indicator, and the trend momentum cross, green above red, then that gave us a high probability that we were going to get a weekly hook and a cross, means the daily is going to cycle. So remember when we got this nice little pullback, what did I say? I said the problem right here with this pullback is this is a good buying opportunity because when we get a cycle, when a weekly hooks and crosses, highest probability the daily is going to cycle and the daily trend momentum is going to cycle. And when we saw this nice little rally started pulling back, well, look where money flow was. It was barely halfway. So when I talk about weekly hook and across equals a daily PAI trend momentum cycle, it's not the red, not just the blue, it's the red, blue, and green. So even during those pullbacks, I go with the higher probability outcome, and that is this green money flow was going to make the cycle. Right? So sure enough, we got a nice little dip and we ripped, and where did we go? like a heat-seeking missile toward the magic fibbo. Now, I don't think it's quite finished. I do think it's going to continue to stair step, but you can see the pound, it's just a little shy of the magic fibbo, so no reason to believe it won't get sucked and pulled into here. But I certainly, if you bought low and you're still in it, no reason not to take some profits off. Sure, that's 500 pips in the bank. Now, do we get the retracement and a continuation? Sometimes we could go slice through and then we pull back to bounce off the magic fibbo to continue. But you'll hear my tune change when I start to see price close above 129.50, and then we take out this 130 right there. Bingo. Then I'm all bullish again, like I was from this to there. I'm going to be just as bullish from that 130 up to 136, 138. That's where we're headed. So do we continue and just stair step our way on up there? Or do we get another pullback? I'm thinking, based on the daily getting overbought, we're probably going to get some sort of pullback and maybe even get a slingshot higher if we're going to continue, certainly. Or do we get this 618 retracement first and then go up? So it's a little too early to call. This is, I guarantee that this is definitely the bottom and we will not go any lower in the foreseeable future. Too early. All this says is if we can continue this rally, then we have a 75% chance we're going to go there. I like a 75% chance than a 25% chance. I certainly enjoy that better. And a 70 plus, we'd go up to 138. So absolutely. So this is how you do it. Use the Fibos, use your retracement, use the software reversals. And if you like the automated system, let it trade for you. If not, you want to be the one that enters the trade, great. Do it yourself. That's what it's there for. So you can enter the trade yourself. And then when you start getting up here, manually take your profits. The other trade we talked about, and we're still kind of in this one, I did take some profits on it, but it's that pound yen trade, Randy. We talked about buying that, setting the trade management system, and we reached take profit 1. We just missed take profit 2, and right at it. So still up. This thing is a winning trade. What's the worst thing that can happen? It could reverse and pip me out. Now, I'm rather not expecting this thing to go breaking out to new highs or anything, but it was a perfect setup. And I said weeks in advance that as the daily is coming back down, set this to buy that trigger to go long. And when it gets oversold and reverses, it will enter the trade. Well, the other day in class, I had this to the wrong platform. It was in Windsor, but if you look at Windsor, I had it on the pound yen up here, which is grayed out. So this thing would have entered earlier, about 100 pips earlier. But when I saw it in class, I said, whoops, fumble. Actually, it's got to be on this at symbol chart that you see is not grayed out. It'll allow you to trade on this one in your demo account. So this really would have entered much earlier than when we got in. So we'd have been up upwards of 300 plus pips when we took that profit and etc. So I digress with that. But if that was in your live account, you're up a lot more than that 200 plus pips and you banked it already. So are we going to go much higher? Maybe, maybe not. That's why I'm in a position of authority, and this thing could reverse and stop me out, or I could just click to take profit too. On-screen programming. So I just made second profit taking.
And adjust break even plus 1 stop loss and take profit 3 accordingly, based on your findings of a quick multi-time frame analysis. Next stop, money trade.
I don't know if y'all heard all that, but that's my little greeting to keep you motivated while you're in these. So this is on-screen programming. I could just close it right now, click to close the buy, start over. So if you're in this and it's managing and it hadn't reached your profit levels, is my next one up here. Potentially, if we break this high, we're probably going to go test that. So then you can on-screen program, we'll bring it down a little tighter. maybe we go up and just slightly shy of that target. So I can lock it in there, which would give us another 300 pips to get there. So I don't want to close this thing total because I expect we got a chance that this thing could make a 618 retracement, continue higher, and bingo, we go up to the next profit. But that's why it was a high probability trade at the time, and you bank some profits. Fair enough? All right. So I just remind you, if you're using Windsor as a demo, make sure on the latest you use these at symbol charts, because if you put them on these other charts, I had it on this one, and it looks like it's ticking and working, but it's grayed out, and the trade management system would not enter a trade because the platform wouldn't allow it. And so that's when I had to change this in class last week. And sure enough, it went on to reach out, take profit. Amen. That's simple. All right. So let's just close that up and continue with this. So I do think the dollar is going to continue higher. Yes, Randy, you can actually use a quick little workaround is use +61 area code, like you're in Australia. Use your own address, doesn't really matter. Just use the phone number +61. It's a game they play, because I'm not looking to open up an account. And I could show you on mine. Let's see if it'll allow me to do that. Bingo. Come over here, just for example. And I go in here, open an account, and you do the demo. And let's see if it'll make me do it. And then existing trading account. Oh, it's going to make me log in. Well, anyway, it'll give you a chance where you put in your address and phone number, and then you use +61 like it's Australia, and then it works. All right. But I've been running this for 20 plus years with Windsor Direct. And I just like it because it gives us a lot of symbols to choose from. If you do show all, not only is there some stocks in here, there's futures, a little bit of crypto, your indexes in here, and you just go up into here and it's hide all, show all. And when you show all, it throws in a bunch more things in here, oil, this, that, and the other. And then the other one to use is teletrade. I like that one too. This one's a lot easier. You do the same thing because it'll get you straight to the box where you fill in your information. You don't have to go to the website to register first. You can do it directly through the platform. And I do the same thing, +61. And then I type stuff in and bingo, get a new platform. This one too gives you a ton. And so there's just a few things in here. Remember, you got to go up here, show all, and you'll see that it adds a ton of goodies in here. Forex, a lot of stocks, European stocks, futures, got a little bit of crypto in here, got a little bit of everything in here, hundreds and hundreds of symbols. All right, there you go. So where are we likely headed? So coming back over here, let's finish our conversation. Again, I do think this is going to grind higher. Could this be the bottom reverse and the beginning of much further upside? That's the plan. It's just too early to call. So during these periods, there's times you get some profit. You might get pipped out. You get another entry. You get pipped out. You get another entry. Eventually, this thing should reverse. If this isn't already the bottom reversal, yeah, we just made 500 plus pips on this thing. Not too shabby. Well, could we get a lot more? Sure. The plan is to go way up here in that 160-ish, 165. So that's still thousands of pips higher. As the dollar breaks down toward 80, this thing's going to break up here into the 160 plus. Amen? So that's the plan. Keep buying the dips over the next multiple years. But in the short term, we do trade to the downside too. When the time frames align, we warned you about that big correction that was coming during this big, huge reversal where we went from down here at 105, 103. And what did I say at this point? Man, the pound overreacted. This is a huge buy. Even if we go just get a simple retracement to a continuation lower, we're still going to make thousands of pips. And sure enough, thousands of pips. Well, that's where our Elliott wave comes in. And looking at the pounds, let me go back to this way where my Elliott wave is on this one. And I look at GPS coordinates. Well, there are make or break levels that the pricing must honor. This one, I'm a little bit more concerned because I would have preferred to see a deeper retracement to call it over. Look, the euro made a 618 retracement, hit 102. This is nowhere near 618 retracement at 115. So is it possible that this is just a bounce and we get yet another lower high and we still need to come down maybe toward this 117, 118 level? That's kind of what I was thinking back in the day for us to shift this wave 2 over like the euro did, for us to come down about the 50% retracement. Well, we're shy of that. Doesn't mean it's not over, but that's why when I said we're going long here, you got to be in a position of authority because this may not be the breakout going way up there just yet. Maybe we need one more thrust to then call it a bottom. But when I'm trading short term, it doesn't matter, right? Time frames are aligned. I can trade short in a uptrend, and the time frames aligned. I can trade up in a downtrend, right? So it's all depending what you're trying to accomplish and based on what time frame you use. But I like to give you the GPS coordinates, right, Alan? Because we need to know where we're ultimately headed because it makes the trip a lot nicer. Well, we're going to do turn by turn GPS coordinates scenic route to get up to 160, 165. That's what I'm heading, but this certainly could go a little deeper before we get up to 160. Certainly. We would start to worry and concern if we come down here and we're not holding, in Houston, we have a problem. We're probably going to go to some extensions to the downside and make some new lows, but we're nowhere near it. We're hundreds and hundreds of pips. We're a good 1,000 pips away from that plus. So that's why I'm saying this might be over. Could be. But then again, it also could give us one more thrust lower and still end up going to where we're expecting it to go, 160 and above. Amen? All right, let's continue. Well, this week is kind of boring with as far as economic releases, other than Trump speaking. It's kind of a daily thing. But as far as the calendar, we don't have a whole lot of stuff out there this week. Let me pull up this week's calendar. Go back to this up here. And here's this week. And there's not a whole lot here. Got a little Fed speak yesterday. It was supposed to be a closed day. But look at all the FOMC speakers. Harker, Bowman, Waller. That was yesterday. That's a banking holiday, President's Day. And yet we had a bunch of speakers. And yes, the markets were semi-closed. The futures market, I think, was open till 1 o'clock, closed and reopened to 6. But some more speakers. So there could be a little something going in here. But what else can they say? And then eventually we continue on. We have FOMC minutes on Wednesday. That's just from the last meeting last month. What else can the minutes tell us we don't already know? But sometimes there's a little interpretation. It might get a little algo trade system to fire off and do something. But other than that, it's, basically nothing really out here. And more speakers the next day on Thursday. I mean, they just all want to make their rounds. And Jefferson, I mean, they got all of them coming. If you didn't speak, then what's going on? One thing we do have is existing home sales, not a big maker, and flash PMI. So I'm not really looking for too much in the way of news releases to get the markets going. What we do have is some technical pictures showing that we had been talking about on ES, for example. This looks like it wants to go up. We're going to go, and I've been saying this for a long time now, we're going to reach 62, 62.50. Is this going to give us a little pullback and rally? Well, we kind of set the tone on this high to this low. We closed above the 618 to 786. So we finally broke out of this downtrending lower high line. And the higher percentage right now, Randy and others, Alan, we're going to 62, 62.50. Well, even if I told you that if this thing were going flush down first, we're still going to go to 62, 62.50. Well, price has proven again, we're more likely going to go there first before we get that much bigger retracement. Now, here's what I'm kind of thinking as we move through the next several weeks to months, that once we finally grind up, which should be a stair-stepping affair to get up here, I think we're going to have a big, huge reaction from reaching these targets between my 62, 62.50. And at that point, I think the market's going to make a big correction. Not the biggest one, but a big, not Elizabeth, I'm coming to join you, honey, Fred G. Sanford. But I'm thinking this is probably going to come down into the 5,000, mid to low 5,000 range. Then we're going to get another big push up to about 65, 64, 65, maybe as high as 66. You can see the top of my box up there. And then we're going to get Elizabeth, I'm coming to join you, honey. And that's the one that's going to go below 4,000. So in the months to come, we're going to grind up here first, get a nice correction. Then we'll call the bottom when we feel it's appropriate to say this is a great opportunity to go long and shoot for this thing to go all-time highs again. And this could take months, right? This correction could take months. So I can't say, well, this is going to be, this week, then maybe by March, April, we'll be down here. Then by November, we'll be up here, get a little Santa Claus rally up into 66. And before year end, we'll start tanking back down. It's possible it can happen that fast, but this thing might push out into late fall and then even maybe push out to next year. But this is kind of the chop I'm looking for. Amen. So first things first, I'm not doom and gloom. I'm saying we're going to grind up to 62, 62.50. Maybe we get a little feisty and push 63. But once I start getting in the 62 to 63 range, I think we're going to get a nice hearty correction coming back down. Now, I don't think this is going to be a day, 2 days, 3 days, maybe a week. No, I think it could take weeks for this correction to come into play. What is my target going to be? My magic Fibbo line on the 3-day chart. I showed you this the other day. You can add this, create your own, and on the 3-day chart, it's in the mid to low 55,000 range, about 5,300 right now. So this is kind of what I'm thinking. We're going to grind up toward that 62, 62.50, maybe 63. Then we're going to start stair-stepping lower to come seeking out this magic Fibbo line. Again, it's sloping upwards, but as we start declining in the weeks or whatever it takes, or even months to do it, this thing will start flattening out a little bit as we start breaking lower. But I think we're probably going to make a move to come down and test this magic Fibbo on a 3-day and then go up and push toward that 65, 66. And then we're going to go tanking. Elizabeth, I'm coming to join you, honey. Whether it happens this year or next year, I don't mean it's going to take 5 years to get up here and then maybe by 2030 we're going to be over here. No, I think it's going to be much sooner than that. Maybe even top out this year and start to decline in this year. So up, down, up, down. Got it? So I did say one thing, I don't make predictions because everybody predicts. The weatherman, this person, every other Tom, Dick, and Harry, and every so-called guru, and anybody out there that does market review. My prediction, my prediction, my prediction. Well, I'm not a prophet, so I don't predict. I anticipate. That's why we call this the market price anticipator software. So I'm anticipating before we break 7,000, we're going to break 4,000. Let's see if that plays out. That's pretty big, knowing how close we are to get to 7 and how far we got to fall to get below 4. That's a pretty good anticipated move. So in closing on this, we're grinding higher. Alan, we're going to 62, 62.50, maybe 63. At which point I'm going to take profits and watch this baby for a reversal. And no, I don't think it's going to be Elizabeth, I'm coming to join you, honey, even though it might feel like it, because let's just say we get up to 62.50 and we come down about 5,300. That's almost 1,000 points, man. That's pretty big drop to come down to this zone. And who's to say by the time we step down here, maybe we're up about 54, 50, whatever. We're at 53 now area between 53 and 52. And this will continue to kind of slope upwards even as we start stepping a little bit lower. But eventually, as we get closer and closer, this thing will start to flatten out. And maybe we come down to 5,500, 5,400. We'll see. Then we bounce and start stepping up toward that 65, 66. And then we get the Elizabeth, I'm coming to join you, hon. So I know that's a lot, but short term, we're going to 62, 62.50. And it is 75 plus percent. That's where we're headed. What about NASDAQ? Same. On this latest high to low, we took out the 618, 786. There was a close. So we're going to 22.6, 22.9, 22.895. So we're definitely headed there. We should grunt and grind. So I think any little dip should be bought while we grind up here. Then kind of the similar type thing. We'll get a bigger retracement, then another all-time high as we push maybe to 24, 25. We shall see. Depends how, what point do we reverse from to then kind of target what's the next level we're likely going to go. Maybe it's 24, maybe it's 25. And then we get Elizabeth, I'm coming to join you, honey. Amen. But you can see on this chart, I kind of have these arrows. And this is what I was thinking. See if I can move this back over that way. That we're going to grind upwards and we'll make a new all-time high. But during this corrective action, remember when it corrects, it doesn't just go straight down and that's it. And then we go back up. We look for a 3-wave type of correction. So eventually, this is the big one we're talking about. How low should we go? This thing could go way down here on the NASDAQ to the monthly. And you see where that roughly is sitting. Let me kind of move this way and get this little box out of the way because it's covering my label. But you can see where this little box is, where that EMA is intersecting. So this is kind of what I'm thinking. We're going to go up, then down, then make another all-time high. Then when Elizabeth, I'm coming to join you, honey, some big move down, we're probably going to come somewhere around this 10,000. And again, it is sloping upwards and it could take us a year or so between that Elizabeth, I'm coming to join you, honey, and total correction. Oh, snap. Yep, I'd say all snap on you. So let me go back to this one. And so be careful that, yes, I think we're going to go up toward that 22.6, 22.8, probably as we go topping out. Then we get the correction that we come down probably toward the 3-day. So I'll draw it with these arrows. So what I'm thinking is going to happen similar to the ES. If you trade NASDAQ, we're going to grind up a few hundred more points. We're going to top out. Then we're going to get a correction coming down toward that 3-day Fibbo, and you see 3-day, which is putting us around 18.5, between 18.5 and say 19. Why? Because when we start stair stepping in during this corrective action, this thing will start, continuing to slope up, and eventually it'll start flattening out a little bit. But I think it's probably going to try to make a run toward this to then bounce off of it, to then go up to our bigger target, all-time highs yet again, which is somewhere between that 23.5 and 25-ish is kind of what I'm thinking. So what is this? Same as the ES, NASDAQ, should go up, then down, then up, and then the big one. And where's the big one? Down here about 10,000 or so because of the monthly magic Fibbo. Right? See it? So could that be 11,000 by the time we get there? Sure. So remember, this magic Fibbo will change as time passes, as more data comes in, but that's why you keep these on your chart. Definitely keep the magic Fibbo line on your charts because it is a thing of beauty. So any questions on the push here? Boom. So up, down, up, down. So I kind of want to give you the big picture so we can start to trade to the downside. I do think we're still got more upside. I mean, why do we think that? Again, I'm going to go back to the daily, show you what the software looks like. I always look at the software combining. Yes, we're getting a little bit of a pullback. Why? Well, in the most recent move, we're reaching the extension. This is the extension we're headed. But notice from the recent move, from this swing point high to this swing point low, we're reaching our 1448 target. No surprise that it hit that target to reverse from, right? No surprise there. And if you use this one here, so Alan, we do rinse and repeat all the time. If I use that most recent high to this low, then look what we're hitting. We went right into the zone. So it doesn't matter which one I use. I hit the 448 on the one. I hit the 448/272 on the other. No surprise, we're getting a little bit of a pullback. Well, I do think we're still going to stair step up toward that for ES 62, 62.50. And from this recent high to low, we already took out the 618 and the 786 candle body close above. So that gives us a 75+% chance we're going to 62 and maybe 62.50. Then we get the correction. Then we get another push all-time high toward that 64, 65, 66. And then we get, Elizabeth, I'm coming to join you, honey. Fair enough? We'll go over here to the software and we can see here on the S&P, my weekly's still up. That kind of sits well. And you say, well, it's well overbought, but look, sloped up, up, up. My daily's overbought after this run, sure. So I wouldn't be surprised to see a little bit of a pullback, get another little slingshot higher like that, a little slingshot higher. We go up, a little slingshot higher, go up one more time, start pushing toward that 62, 62.50. Then we're going to get a bigger correction. Look how the software is setting up for that. What are we going to get during that bigger correction? We're going to get a weekly start to depressurize, likely going to end up slingshotting higher in the weeks to come as we go on. Take that out of the way. As we go on to do this. Well, we talked about this, and this is the NASDAQ. So let me do my little arrow. We'll go up to about 62, 62.50. Then we come down on the higher time frame. This is the weekly now. And this weekly is likely going to do another slingshot like that, right? Maybe it's a smaller one, maybe a little bit larger one, but we've been slingshotting higher and higher for a long time. No reason to believe we won't continue, right? Slingshot Palooza. So that's where the smaller correction comes from. We get a weekly turning over, we get a hook and a cross down. And what does that tell us? When that occurs, Randy, we're going to get a daily cycle down. So once I'm up at that 62, 62.50, maybe 63, I'm going to look for a daily cycle down. Daily cycle down. And we may even get a daily cycle down plus a little slingshot lower to pull the weekly down a little further. But that's kind of what I'm thinking. We hit 62, 62.50. We come back down to the mid 5,000 range to bounce off that 3-day. Then we go back up to all time highs yet again. And this is during that smaller pullback. We should at least get a daily cycle and maybe even a daily cycle with a little slingshot action. So, what does that mean the weekly software is going to look like? Well, in this weekly software is going to hook and cross down. I'm not looking for this weekly to cycle down during that correction, not quite that far, but a nice cycle nonetheless to where we slingshot back up. Like that was a big slingshot there. Trend momentum made it, but money flow only made it halfway. See that green line right there? That was a massive slingshot during this correction. So that's kind of what I'm thinking as this is setting up. Then we get another big weekly slingshot back up. We go from the mid 5,000s up to the mid 6,000, 64, 65, 66. Then we get Elizabeth, I'm coming to join you, honey. And guess what we're going to see? Likely going to see a monthly cycle down. So, how long does it take a monthly to cycle? About 2 to 5 years. So, once we do that big reversal, I'm thinking there's a chance we could get that big pullback down to a big correction below 4,000, right? And we're probably going to get a monthly cycle down out of that. Because think about it, we'll be up at like 6,500 and we got to go below 4,000. That's 2,500 pip move down, 2,500 points. That's a huge move. That's more than likely going to be that monthly cycle down. Amen. But that's why you can see the software setting up. My weekly's overbought. Yeah, they're overbought territory, but look, they're still up. Not the idea you overbought. It's the idea your PAI starts hooking and your trend momentum crosses. Then that's game on. We're going to get a dip. We're going to get a dip. Well, I think we're going to grind higher first, then we're going to get the dip. Same thing with the NASDAQ. Kind of looks the same. Weekly still up. Trend momentum's up. Steep slope, a little angle separation still going up. My daily's extremely overbought, sure. Well, that's why while we're stair stepping and the weekly still pushing, we're likely going to get another little slingshot, maybe a few of them, as we grind up toward that 22.6 area. Then what? Then we get the bigger correction. We get a daily cycle down and maybe even a daily plus a little slingshot because maybe the weekly needs to depressurize a little further. And we turn down, we start depressurizing. Look at this one, big, huge slingshot. Look where money flow stopped, right there. Red and blue made it. Trend momentum almost made it during that correction. And Randy, what was that? A 3-wave correction. Now we got another 5-wave on upwards. And what's next? A 3-wave correction. Then we go on to all-time highs one more time. Then we get the big one. Amen. And when we get the big one, we're not only going to get a daily cycle down, a weekly cycle, we're going to expect during that period, we're going to get a monthly cycle down. Amen. So stay with us. We're going higher. No ifs, buts, or ands. Keep buying the dips until we get up to that 22.6 area. And then we're going to get the bigger correction to follow to yet another push to all-time high. Then, Elizabeth, I'm coming to join you. That's kind of what we're thinking. So any questions on that? So what does that mean? Buy the dips till we get to 22, 22.50 area and take profits. Buy the dips until we get a little bit higher to about that 22.6, maybe 22.8 range. Take profits. Then we get a nice hearty correction, probably going to be beyond the daily Fibbo and go to the 3-day Fibbo is kind of what I'm thinking. We need a deeper correction after all this. This thing's been vertically going up insanely. So we do need a somewhat of a deeper correction. So I'm thinking probably somewhere around the mid 18 or upper 18s. Again, by the time this baby grinds up here to come down, if it breaks the daily, which is this area, if we break the daily, then where we're going to the 3-day. So we're going to get a substantial retracement. Maybe it stops at the daily and we don't reach the 3-day, but it's coming. We didn't quite reach it over here and we kept going. So we definitely need to reach the daily. And we came close to the 3-day over here. We didn't reach it. So that's why I'm thinking we're going to reach it this next time on the 3-day. But either way, I'll be in the class and obviously giving you instructions. If we don't hold the magic fibbo on the daily, then we're definitely coming test the 3-day right there. Boom. Then we get one more push before Elizabeth, I'm coming to join you, honey. Fair enough. But again, in short term, we're going to grind up to the zone. And again, who's to say? Maybe we get up here, we reverse, like I say, or maybe we get a little feisty, then we'll reverse. But when we start to get to that 22.7 and higher, that's where I need to be taking a lot of profits and looking for a great opportunity for this thing to dip. And man, I'm salivating when we come back down here and we're down around that 18-ish and change to buy it to go up toward maybe my 24, 25. Thousands of pips back up to get that last all-time high before we get to Elizabeth, I'm coming to join you, honey. I was kind of hoping we were going to reach the daily this past little correction. And we didn't quite get there, right? We came close and then we got this little dip, but we didn't quite get there. That's why I was hoping for this, Randy, that this baby continued because this was salivate to buy because we were still going to go to 22.6, 22.9 area, 22.8, 22.9. I was hoping to get that. That was salivate country. We didn't quite get it. So it's coming. Now that we get up here, we're at least going to come down here. If we don't hold that, then we're going to go down further to reach that 3-day. Amen? So you can go back in history and see with this 3-day and my magic fibbo line, we don't go forever without hitting it. Touched it, very close, and we just went on, and then eventually what happened? Bingo. So this, we had a nice run. We almost touched it, and then we continued. And then what ultimately happened? Remember, we called this that year, and we said, expect a big decline. We pegged that one. Well, sure enough, we almost touched it. We're continuing higher, kind of looks the same, right? You get a nice little run, and then you almost touch it. You get your continuation, and then it comes back. Well, we got that. We got a nice run. We almost touched it. We continue a little bit more, then we touch it. Food for thought anyway. But expect that we're going to go higher, then we're going to come down. And if we don't hold that, we go a little bit deeper toward that 3-day over here. And we touch that to go off. Fair enough. And people are, why you look at futures? Because if you look at the futures chart compared to SPX, for example, look at these gap ups, gap downs, gap ups, gap downs. where price closes and the next day it opens and the next day it closes, and the next day it opens type scenario. There's a lot of gaps. Futures fills in those gaps, right? I like to see price action, and it helps me with my market anticipated moves. So this is why, and I trade futures as well. I love looking at the full picture more than gap up and gap downs. So right now we're going up 62, 62.50. The writing's on the wall. The prior high to low that brought in these targets, we took out the 618, we took out the 786, and yeah, we got some retracements in here, but what did the retracements do? Alan, that's where this comes in. You take the low to the high, and we held the 618, got a big rejection where it closed well above that 618. Got another one on the next little pullback. It's still a 618 retracement holding level on these lower time frames. See, my 786 is down here, my 618 kind of overriding right there. But during that period from this low to that high, 618 bounce. Look at that beauty. So nothing about this run up and pullback said we're not going up here. It did a 618 retracement and now it's breaking back out again. And we can rinse and repeat this until we're blue in the face. Remove that. I'm going to remove this just to show you. And even this latest move. Remove this. But from that latest move, not only was it 618 from here, but we could still see from this recent low to the current high, maybe we get a little 618 retracement before we finish getting up here. We're going there, 62, 62.50, but could we get a little bit more retracement? Doesn't look like we can get much more, but it's possible we could stair step like that. But that's what I mean. We get a nice little sell off here. Don't panic because writing's on the wall. We're going up there, highest probability. So any dip should be bought short term. Any dip should be bought. Where we're going, 62, 62.50. Then we talk about taking profits and maybe even look at playing some of the downside. All right. But I like to see some price action up in here. NASDAQ, same thing. How do we know that some of these pullbacks we didn't hold? This is a huge rejection wick and where it closed. Guess where that held? Anybody want to guess? 618 retracement. From that low to that high, where did we hold? 618. Next day, dip above 618. Next day, dip down. Where did we close? 618. That's why the wicks don't matter in this case. It's where the candle body closes. So from this recent high to low, we closed above the 618. We closed above the 786. That is screaming we're going to 22.6, 22.8, maybe 22.9. So highest probability we're headed right there. Now, in the interim, what did we get on these smaller moves? Same thing. 618s are holding, even if you get that deep. So from this recent low to that recent high, we didn't quite get to the 618. So it's not to say every time, Randy, you have to get a 618 before it's going to reverse. No. But when you get the bigger pullbacks to start talking about, well, we're going up here, when do I question that? When should be questioned? If we start to see this low to the current high, right? We got a little stair step we held and we're going up. But if we were to see this thing, and this is from the recent low to the recent high, and if we started to pull back below this 20 to 21.5 area, and we started to take out that little swing point right there, right around that, what's that, 21.3. If I see price reverse and start closing below 21.3, then Houston, we have a problem. We're going to target magic fibbo, which would be my extensions down here. But so far, we're holding exactly what we need from that prior high to low. Even though it didn't look like it, we still closed above the 618. And we're continuing to go where? To this target. So what are we saying? Keep buying the dips until we get up there. And even if we get some sort of little dip here where maybe one of those talking heads in the FOMC speaker says something and people don't like it, and we get an overreaction to a little pullback, as long as it holds that level, we're good to keep buying till we get up there. Amen? Keep buying the dips. We're going to 22.6, 22.8. Then we get the big one, bigger one. Then one more push, then the big one. Let's see how that plays out, how accurate that is. Only one that I'm not feeling so much is this latest one on the Russell. It's just not participating. So from the prior high to low, I do think while the ES runs up to 2062, 6250, and the NASDAQ makes its move toward 22.6, 22.7-ish, 8, that this is probably going to rally up into this 618 retracement up here. I do not see the Russell breaking out, going to all-time highs. Fair enough? So part of the ES and the NASDAQ doing it, breaking to all-time high, I think the Russell is going to get caught up in this zone here between 23,060 and 24,002, 24,010, 24,020. That's it. This box, this pink box. So while the ES goes to 62, 6250, while the NASDAQ goes to 22.6-ish and higher, this is probably going to grind up here toward this 2350/2420, somewhere in that zone. So I'm really not looking for this to go breaking out. Where are my upside targets that would limit this? On the recent move, stretch that out. So on the recent move, recent high to recent low, kind of ties in beautifully. See it? From that high to that low, Randy, we looking at this, we closed above the 618, got a candle body, went up, didn't quite reach the target. We kind of pulled back, bounced off the magic Fibbo yet again. See why it's called magic Fibbo line? And where we're headed on the Russell, gonna grind our way up toward that 2350, maybe 2370. This would be a good target for us to shoot for as we grind upwards. So the NASDAQ runs to 62, 6250, excuse me, the ES, S&P runs to 62, 6250. NASDAQ runs to 22.6, maybe 22,007, 22,800 range, while this grinds its way up to 2350/2370, maybe as high as 24-ish up there. Before then it gets a correction, and then ES gets its correction, and NASDAQ from its level gets its correction, and we go much lower. All right, so there'll be some shorting opportunities coming. I just think we got a greater chance for this to rally, greater chance for this to continue to reach its target, 62, 6250, greater chance for this to reach its target a little bit higher toward 22.6, maybe 22.8, at which point what happens? Russell hits that 2350, maybe 2400 range when these are up here, and then we get that correction. Got it? All righty. Let's continue. We also have, for those of you keeping score, the software is on NinjaTrader 8. I included the Magic Fibbo line. I included the numbers up here, our rinse and repeat extension retracement levels. I don't know those of you that are familiar with NinjaTrader. It was kind of a pain to add their built-in Fibbos. and then you had to add them one by one and this, that, and the other. Well, this one has it for you. You go into drawing tools, and we got our MPA, Fibonacci retracement, MPA, Fibonacci extension, with the same thing we're showing you on the trading view, already built in for you. So convenience when it's preset and it's already there with all the different levels that I look at. Isn't that cool? So big trade, massive trade is this. You should be buying TSLL shares. Why? Because it's going higher. Tesla is going to make a big run. And how do we know that? BlackRock just bought 7 point something million shares. And then Vanguard bought over 3 million shares of Tesla. And they're loading up on Tesla. So I would love to see one more flush, because as they're loading up, you typically get a flush lower, and people think, well, wait a minute, they're buying all these shares. Why is price going to give us a dip? We may not get much more of a dip. We got the one I was looking for. Tesla did come down, and this is the TSLL, but TSLL is the leveraged Tesla product, and it's in the $20 price range right now. But Tesla did what we asked it to do, and that is come down and test the magic Fibbo line. That might be the end. Maybe this is the end and we start breaking out. But just to tell you, if you see Tesla get spanked one day and it rips and dips a little bit lower, then keep backing the truck up on TSLL. Now, again, I'm not a certified financial planner, so I can't tell you what to do. All trading involves risks. There is no such thing as trading without risk, substantial risk. So if you need somebody to tell you exactly what to do, get a certified financial planner. Most of those people just want to take some of your money and make it some of theirs. They don't care about your money more than you do. But this is a huge setup. Last time, Alan, I told people to buy TSLL was in October when it was at $9 and it went up to $40. Not too shabby. Well, now is the buy zone. Nibble in here. This might be the low, and that might be as low as we go. Maybe we get one more flush. I have junk bids down here. I got in at 17 the other day when it dipped lower, when Tesla went down toward its Fibbo. I got some at 17. I have more to fill at 16, 15 if we can get there. But maybe we get one more little push. And the reason I'm not convinced that this is guaranteed to be the low is the weekly is still down. Let me get my weekly chart for you. Weekly is still down. So I would love to see one more flush, right? Wouldn't that be a thing of beauty? That Tesla gets a little rally and gets one more flush as those big boys like BlackRock, Vanguard buying millions and millions and millions. Did I say millions? And millions of shares of Tesla. And we get that last little flush, and maybe the weekly finishes that cycle, and my daily gives us a little slingshot lower. And lo and behold, we pop down and I get my fill at 16, 15, whatever. Sounds good. I can't say it's definitely going to do it, but hey, weekly still down. It could just reverse and get the hell out of Dodge. No pun intended, Randy. Boom. And it goes. But what's our target? I'm loading in at 17, 15, et cetera, or lower. I'm shooting up here for 45, 48. That's a big move from where we are to where we're targeting, and could even extend up to 50. On the higher time frame, it's up here in the $50 range. Let me kind of stretch that out. I got two things running, but I'll do it over here on the charting platform. Actually, over here, my TSLL, I think I have it on here. Yeah. So here's the weekly. We got a nice little rejection. Is this going to go breaking out, or do we need one more flush? If we get it, game on. But from the high to the current low, that's the 45.48 price range. See it? So, yes, I think this is a buy. It is 2x shares. So it is leveraged. So when Tesla runs, this baby takes off. And what did we get down in here back in October? Right there. See, October 24. What did I say? Let's see, I think I have it open over here. Back in October, right there. Consider the TSLL trade. I expect Tesla to hit a high of about 500. That's why you want to consider that TSLL trade. Back in October, what did that baby do? Let's go back over here. What did it do? From October low, it went from about $8, $9, up to 41 bucks. Not too shabby. Now we're setting up for the next one. And this thing could exceed expectations and get up in the 50s too, because it is 2x leveraged. Leverage cuts both ways. If you're on the right side of it, you love it like that. But if you're on the wrong side, it cuts the opposite way too. So this is why I'm saying this is, I already started to nibble on this. So I can only tell you what I'm doing. And I don't know we're going to get another flush lower, but I do have those bids sitting in my broker. And it says I want to buy hundreds of shares at 16 bucks. I want to buy hundreds more at 15 bucks. And look for this thing to go soaring. If it just takes off, and because all the BlackRock shares they're buying, a Tesla, et cetera, and Vanguard, and there were like hundreds and hundreds of firms buying Tesla shares like they know something's coming. Is it the Tesla iPhone moment or something? I don't know exactly what it, but they're all loading the boat before it happens. So typically when that happens, you sometimes get a little dip while they're loading up, and then this thing goes insane. Well, what if this thing just takes off? I'm already in it. I'm already in it to more than double where I invested. I would love to see a flush. I got in at 17. Why did I get in at the 17 range? Because Tesla that day, go back to the daily, not the weekly, Tesla that day came down and touched. And this was after hours. It's not on here, but we had after hours trading after his news release, and it came out. This baby dipped down and actually touched the magic Fibbo. So that day is when I saw that dip and I bought some. Amen. And sure enough, is this over? Well, maybe Tesla wants to go up and give us one more flush. Maybe. But the lower Tesla goes, this is salivate country. So if you see Tesla breaking below 330 or lower, salivate country to go long. This might be the end. That's what I was asking for. Remember when it was up here and we talked about this trade? I said Tesla's due to come down and test around that 320 area. And when it gets around that 320 area, that's when you should start to look at buying. And maybe if we even go lower, then I can add to my position. But I'm expecting Tesla to do what now? Based on the recent high to low, we're going to expect Tesla to go breaking out on this bigger move, 580, 600, onward and upwards. So just as it made its move toward 500, TSLL went from $9 to 41 bucks. Tesla should go from about 320s where we are. Maybe we get one more flush, but in the 3 to 320 range, which we already reached. And we should go to what? Double towards 600. Any questions? And beauty about TSLL is anybody, any broker, you can buy it for free. Not free, you got to pay for the share, but you don't pay a commission. Buy some. And so far, we were below the Fibbo line. We came back and tested it. This is still good. And I won't say it can't flush one more time, but that's just a gimme. So if you're going to trade this, this is a good opportunity to add a few shares and see what happens. The goal is for us over the next few months to go up toward 45, 48. We break that, then we'll be targeting the 50s. And I would not be least bit surprised if we get a flush. Wouldn't be surprised with that, but that's back the truck up, salivate to go up here to the mid to high 40s, maybe even low 50s or so, mid to low 50s, and which is more than a double. I like it. Amen. And then to back that up, we got, like I said, BlackRock 7.4 million shares, Vanguard 3.5 million shares, and that's not the only two buying like crazy. So FYI, opportunity is repeating itself like we saw there. And how long did that take? From the time in which we mentioned it to the time in which it kind of started reaching topping was from October through December. So a month and a half, 2 months. So that's why I think it's going to take a few months to get up here. Any questions? Let's continue. Gold, black gold, Texas tea. We're struggling. What I did not like was the rally into the magic Fibbo and the rejection. We, however, did make a slight lower low, which could clear this pattern up, set the tone for us to go up into the 80s. But up and until we start closing above the magic Fibbo line and we take out that little swing point, then it's game on to go up to 80. If not, and we don't hold these lows down here, then we're likely going to get a flush to these extensions. And if we don't hold that, next big support is about 60. We don't hold that, the next big support is roughly around 50. Yep. So, Mr. Tucson, are we going to get a flush down here? I know Trump would like to see that because we get way down in here. He can do what Biden drained, our strategic reserves, and go ahead and fill them up when we're down here and fill them all up. So we're in a strategically significant position as right now. We go to war and our strategic reserves are drained. It's not good. Not good. So could we go down? Yes. Could we go ripping? Sure. Absolutely we can. We're stuck. We're stuck between a 618 support zone. We're stuck between a 618 resistance zone. And we got support. We got resistance. What's it going to do? So far, we start to do the pros and the cons. From this prior low, we can say from this low or this low, we're stuck between the 618, 786 zone. Yep. So you remember my conversation with this, Dan and others? We don't hold 75, we're going to 73. We don't hold that, we're going down to 71. We did it. Now, we don't start holding that, and we start breaking below this swing point, and we don't hold it, then there's a little support about 68.50, a little bit at 67, but the writing's on the wall from that low to that high. We don't start holding above 70, which would be breaking a new swing point, closing below it, then it's a high probability we're going down to 65, maybe 63. So my plus and checks on are we going higher, we're going lower. On the plus side, we're going lower. We didn't hold the magic fibbo. We broke it. We retested it, and we broke to a new low. On the plus side, we still could go higher. We're still holding that recent 618786 zone. So again, we close below 70, we're going to 65. That's a good $5 run for you to the downside. If in chance we do get this, it's kind of holding, right? It's being stubborn around that $70 range. Look at it. Went right to it and tested it and then bounced, which happens to be from the prior low to high, this smaller extension. So maybe this is it. Maybe that last little flush was it, and we start breaking out. But until we what? Close above the magic fibbo, and we take out that swing point, then I'm game on to go up here to 82, 83, which of course we would target 76, 78 first. That's just this little zone. Then we go up there. But a good sign would be to break above, retest, close there. Then it's all about being up. But for now, rallying into the fibbo and failing is not feeling real what I like to call a warm and a fuzzy feeling. I don't feel real warm and fuzzy. We're going into the 80s right now. But drill out, and the big picture is we have a big resistance zone at 80 and then 90. And to the downside, we have a big support zone up at 60 and 50. So I know that's kind of big areas, right? Well, we got our 90 up here. And we have our 80. It's kind of rounded about. Here's my 80 area. There's your big resistance. Your big supports down here are going to be 60. And I already have it over there, this big guy over there. And I'll change this to green. Style is on here. Yeah, style. Green. And if we don't hold that, then we got this next big one down here at 50. So those of you trading black gold Texas tea, we're stuck. We're stuck, we're stuck, we're stuck. So we start breaking 70, we target 65. We don't hold 65, we're going to 60. We don't hold that, we're going to 50. To the upside, we start breaking above the magic fibbo, we take out that swing point, then we target a couple of bucks first to 78. We break that, we go into 80. We break that, we're likely going to 90. So here's your stack right now. And at the moment, I'm more bearish than bullish because from this low to that high, we're below the magic fibbo. We recently rallied into it and failed. So as long as we can close back above it, I get the warm and fuzzy to go higher. We take out that swing point right around that 75. Then first target 78, 77, 78, followed by 80, 82. Got it? So what's it going to be? If we don't hold 70, we're going down to 65. So from that low to that high, we don't hold 70. You can see it right there, Randy. We close below, not a wick, but a candle body below 70. We're going to 65, 63 area. Don't hold that, 60. Got it? Well, let's look at the software. What does the software look like on here? Go over here. I think I got black gold in here somewhere. There it is. Weekly still kind of down, so that leads us to believe we might get a little bit more push lower. My daily's getting oversold, kind of grinding and chopping here, engage, disengage, engage. So it's stair stepping. So what I've been saying for Dan and others that trade this, can I buy these little 4-hour reversals, scalp it? Sure, but you better be taking aggressive profits, because the fact that we're below the magic fibble on a 4-hour, we're below the magic fibble on a daily, that's not feeling extremely bullish right now. So any dips you're buying and rallying going long should be met by take aggressive profits. Fair enough? Because my weekly is still down, which leads us to believe we may get one more slingshot down on the daily for this thing to continue a little bit lower, get oversold. My weekly get oversold, finish that cycle. And what if in a few weeks this is oversold, we're down at that 65 or 60 target, even better? Would I buy it from there? You betcha. Because then we could get a weekly hook and a cross. Then we get a daily cycle up. When my weekly hooks and crosses, then we would expect this daily to cycle up. And we would expect what? Likely going to get sucked and pulled. Say we come down, retest that 65 target we're talking about. We slingshot lower. My weekly gets oversold. We get to 65 or 60. Lower we go, the more I like it. Then I have a weekly oversold, a daily oversold. And when that weekly hooks and crosses, the daily cycles up. That would give us somewhere from the mid 60s or 60 all the way back towards 70 plus for us to test that magic fibbo again. Kind of like what the dollar yen, pound yen trade just did for us. Remember, Randy? I'll show it over here. I already showed you on the platform. But what did we have? And why did I say the pound yen, GPB, no, GBP, sorry, Great British Pound, US dollar. Actually, I have it on here anyway. What am I doing? It's right here. Right there. So what did I say when this trade was setting up in the software? I was like, we're due to get a bounce to at least go test that 618,786 area. Likely going to see us go toward the magic fibbo. Bingo. There was our several hundred pips right there. Just like the time before that, Randy, we made over 1,000 pip bounce on that one. Not too shabby. So is this the end? Oh, it's kind of looking a little 5-wave-ish, and this could be a little 3-wave-ish, and maybe we do get the flush further down. So we reach the targets, we're bouncing off of it. So that's why it was another one. From that high to that low, we came down to our 186, 187 level, and my daily was oversold. That's why I said, we're likely going to get a 618 retracement in this, even if it turns out this bounces 618 and fibbo line to then flush even lower. Good. You still take advantage of that. So I'm not saying that this is over and we're flushing down just yet, but you continue to rinse and repeat on the latest price action. When do I become concerned about my long trade that I just got in? Well, Alan, what do we use? We use a 2-point tool, Fibonacci retracement. We go from the low to the high, and we watch this 618 level right around that 189 area. If we start to close below 189, then the likelihood we're going to go higher is much lower probability. And if we start closing below that 189 level right there area, then what do? Bingo. I start targeting 186.50, 185. What if that 618 level holds and we go breaking out? Then you could do the same to the upside and say, let's just anticipate that this high and we come down and test this low and we hold that 189, for example, and then we bounce and go breaking back up, then we could start targeting this 103. What is that? 193, 195. So is this going to stair step and continue to go up to 93.80, 95, and eventually start breaking out to 97, 98? Or is this baby going to fizzle and start breaking lower to start targeting 80, 82 down here? First target 86, 85. That's why I force price to prove itself and get the software in alignment. And then the high probability we reach an extension down here. Remember, Randy, when I told you that we're going to go lower toward this 188, 187. And when we get down there, then I'm going to look to what? Buy that daily when it reverses back up. But be sure to take aggressive profits. And when do we take profits? When my 4-hour got overbought. So go back to the software and we go back to that trade. It's somewhere over here. I think I have it in this one too. Do I? Do I? Nope. I guess I got to go to this platform and get to my dollar yen. Yeah, there it is. It's over here. Okay. So is this likely to go higher? Is it likely to go lower? Still holding, so we could go higher. That's why I'm still in it a little bit. And my weekly is still down. That's why I'm not feeling too warm and fuzzy about this thing going breaking out. Monthly, and oversold, overbought, pushing lower. So we could get some more downside in this big move. But those, Alan, you remember this call years ago? When we were down, we saw this maneuver here, and I called it bottom down here in 1920. And I said, we're going up 10,000 pips, and we're going to go retest that high. Oh, took years to get up there, but that was a big call. Now what? We need a retracement. Look at off of this low. From that low, let's see if I can just do it on my Fibbo here. I can grab it. There we go. From that low to that high, we're due for a deeper retracement. Here's my 618 down here. And let's see if I can move this over. Turn the auto scroll off. I guess because I'm on a monthly, it won't let me go back further. Shame, shame. Well, anyway, it puts us, let me get a crosshair, and that'll give us somewhat of a potential downside. We could go to the 150s and still warrant this multi-year move up we pegged, get a 618 retracement, come back to this little zone, and then bounce and still go higher. Sure, that's possible. But we got a monthly cycle out of this with some slingshotting, and that's kind of what we said we would do to get up here. Amen? So it's only so often do you get these setups at extremely high probability. Well, now, as long as we hold that 618, and let's just say we got a monthly cycle down here, it came down, just for example, and we were holding this 160 area, 159 area, and my monthly was oversold like we did over here. Monthly, weekly, daily oversold. Would I be buying that? You betcha. Especially knowing it's at a 618 retracement and holding. That would set the tone for some really high numbers. So let me do it over here for you. Come over here to a monthly. Kind of giving you that same picture. Examine that out. Let me remove a lot of this stuff because it's just so overwhelming. You can't see anything. But I'm going to clear that up real quick and give you some idea of what we're talking about. How many massive more pips this thing could be setting up after a massive correction. And we come down to that 618 retracement. A few more of these and we'll be able to see the chart. Sorry for the maintenance here, but sometimes I just do it. That's what I do all day long. Been doing this for decades and decades. So from this swing point low to that swing point high, as long as we hold this Fibbo line slash 16157 area, here's a big support zone off of that latest move. Here's massive support. So far, so good. And what if we get a correction where we come down toward the Fibbo line and my monthly's oversold, weekly's oversold, etc.? When I look to buy that, why not? Time frames aligned. And then from this high, say we come down to that low, what would we be looking for? 214, 219, maybe 233. Wow. From 166 to 214, that's thousands of pips. Say we get to 60, well, right there, that's what, 65, just round it off. 75, 85, 95, 05, 15, that's over 5,000 pips to get up there. Now, can I tell you that's definitely where we're headed? Probably, right? But how much lower do we go? We shall see. This holds, we get a 618 bounce. That sets the tone. Then you get from that high to that low, you start taking out that 191, which is the 1618 to the upside. Then 214, 219's on target. See what I'm doing? So, Alan, what do I think? This bounce could fizzle. I'd like it to fizzle. I like to see this pound yen just get real ugly to the downside and set up a beautiful, perfect bounce. And because, as you start drifting lower and lower, this thing can start flattening out and turn down and still bounce off the magic Fibbo and still be somewhere around that 165 area. Right now it's at 166. But if we start declining a couple of thousand pips or so, this thing will probably start sloping downward. You see, when you start declining and it was sloping upwards, it flattens out when you're chopping. Then as you start correcting, it starts sloping downwards. So as long as this is in an upslope, this thing is still more bullish than bearish. Yes, you can get these corrections, but that's why these targets are not far-fetched. But I do suspect we're probably going to get some more downside. Why? Well, software, technical picture. From the high to the low, if we can't hold that 618, from that low to this multi-top high, tested, we're right at the 618 so far, that bounce off of it. But if that doesn't hold, where are we going? 177, 174. See it? And if we don't hold that, then we're going to come down here. And what is this considered? If we get down in this area, that's salivate country. Because as we get down here, we're going to get a bounce. Whether we bounce to go making new highs up here or just bounce for several more thousand pips higher to then push even lower, hey, it's still thousands of pips up. So I like everything about this. As I did months ago when this bottom came into play and we talked about this thing going thousands and thousands and thousands of pips to go back and test that high. Been there, done that. And this is in the archives. So when you go to the archives, it's in there. I mean, I have it back since day one. Go back, see if will it allow me to go back? Let's see. I'll just go back to log in and then I'll pull it back up. But everybody knows in here, you got archives back in 2011, 2016, then from 17 to 22. So we're talking back in this zone here. Go back in there and you got all those archives in here back in 2020. And I might have mentioned it listed on here about the pound yen, but it's certainly in the class. Let me do a search, Control F, and we do GPB USD. And let's see where they are. That was in 22. No, not USD, Gary, JPY. Sorry. Fumble. P, JPY. Euro yen, pound yen in 21, early 21, 20 bottom. If we go even further than that, let's see if we go any lower. Back in 2020, continue stair step to 147. So we talked about it way back when, back in 2020, and we were talking about continuation up to here, continue buying the dips. And where else is it? Somewhere in here. Well, anyway, part of that prognosis back in those classes was this, that we were going to bounce and go up toward this 194 swing point, highest probability, and sure enough, it did it. Not too shabby. All right, let's finish up with the markets. Any questions on ES, NASDAQ, etc.? Pretty clear. We're going to stair step our way up to these targets, get a bigger retracement, then another push higher, then the big correction. Black gold, finishing that up, that we're more bearish than bullish. If we start closing above the Fibbo line, that starts a warm and fuzzy. We close above the 75, then we're going to 77, 78. Break that, we're going to 80. We start breaking this 82, 83. Then the doors ajar to go up here to 90. Other than that, we don't hold 70, and we start closing below 70. Then we start targeting 65, 63. We don't hold that. We go down to 60. We don't hold that. Then we could go down as low as 50. So you got your support zones, 50 and 60 support, very strong support at 60 and 50. And then we got very strong resistance at 80 and 90. But look at this bigger picture. So this is what I think could ultimately play us in the big picture. Remember this move from the prior swing point. We talked about, I think it's even, is it monthly further out? Yeah. But nope, that's a monthly. I think it was the weekly chart. I go to a weekly chart. So from the prior swing point, we talked about, what if we start breaking 105? Maybe I have it on this one. No, is it on this one? I have it on one of these. I thought it was CL. Anyway, there it is. Yeah, 140. So we started breaking 105. I knew I had it on here. The prior high to low, we started breaking 105. Then the doors ajar to go up to 140. You say, well, that's impossible. But this is going to be some massive resistance up here. This 105 area is massive resistance, right? So let's say we get the bigger dip. At some point, we're going to go test this, right? We should go test 105 at some point. Does that mean we go down to 60 first to go test it? Do we go down to 50 first to go test it? Well, then you would need to adjust your settings, and that would probably pull this down to about 100,000. Let's just say, let me get that one out of here first, and then take this line from that high to low. That's where we are now. That brings us to the 105 target, 618 to the upside, where that big resistance is. Well, what if we end up coming down to 60? Then it's about 103. What if we come down to 50? Then it's about 100. See it? If we get down here about 50, then we put us right around $100. Well, Randy, that's telling me even if we get the big flush down here to 50 bucks, at some point after we reach 50, we're going to go back up and test 100 because that's just what we do. We always come back into play to go back testing these things at some point. What if we don't go down to 50? Well, right now, from the current swing point, which is the 63 low over here, if we don't go any lower, then we're going to go test the 105 at some point. Mark my words, at some point, we're going to go test this. And if we do go to 60, then it'll be about 103. If we go to 50, then it'll be about 100, somewhere in that area. But at some point, whether we continue to grind lower first, we're going to go test 100, or we go ripping now, we go test 100, 105 area, either way. But this is a significant magnet where this crude will come back and revisit sooner than later, but no later than later. And that's just kind of food for thought, but let's just see how that plays out years from now. Sure enough, Gary, it went down to 60 and went up there, or went down to 50, went up there. We'll see how that plays out. Short term, again, I'm a little bit more bearish than bullish, so let me zoom that in. Just to repeat, those of you watching this, we're below the magic Fibbo, so I don't have a warm and fuzzy to go up here yet. Even though I just told you we're going to go up to 100, maybe 105 at some point. Is this bottom reversal? Well, when do we get there? Well, we got to start breaking above the magic Fibbo. We got to take that swing point out. We got to take this battle zone out. Then we go up here, take that out. Then we go to 90. We take that out. Then we're there. We're going at 100, 105. Guaranteed. But that's a lot of what if we break, what if, then we get up here. Sure. But the software is not exactly ready for that big move. It needs more time to set up. So I'll go back to my Whitcash over here. Monthly. Oversold. Looking good for at some point we're going to get the big launch. Weekly. Kind of still pushing lower. So this is why I expect some chop in here. And then the daily. Kind of grinding. So do we get the flush? That's why, Randy, you can imagine. What if we get that flush to 50 or to 60 or 50? And this baby slingshots lower, the weekly slingshots lower, and the monthly pushes lower and does a little mini slingshot. And we get all bundled up together with the monthly, weekly, daily. And we had that flush down to 65, 60 or lower. Man, that's salivate country. That's why I'm telling you, watch the levels for the breakout. When they occur, you trade to the next level, take your profits. If you trade this, but this baby's setting up, and it's probably going to end up being this. We call this paint the PAA Picasso. I think we're going to get a daily, weekly, and monthly cycling up in the months and years to come. As at some point, is this the bottom, or do we need one more flush like we're talking about? Maybe this slingshot's lower so this can finish cycling down, right? So it's kind of up here, kind of cycles down. We get a tight knit like this, and this get all tight for the big move. Well, that's coming. And what is this monthly cycle going to bring to us? Whether it's already bottoming and starting, or we get a little bit more flush, that's why it's salivate down here. We're going to get a run toward that $100 target, maybe 105. And that could be from what? It could be from $50. We could double and go to 100. And that would be my monthly cycle. I'm not saying I guarantee that this is not the low and we just keep chopping and we finally break out. Maybe. But you have to go with what you see. And on a daily time frame, we're below the magic Fibbo. Not feeling too real juicy and strong about that. We break it, we break that swing point, then by all means, we're going back up here. Sure, several dollar trade to the upside. Is it over, or we need one more flush? I personally, kind of for just selfish reasons, I guess. If we can get that one more flush and get down here, the lower we go, and my weekly, monthly, and everybody's set, then man, game on for us to maybe double from 60 to go to 100 plus, almost double. Or if we get down to 50, we double to get to that 100. Game on. All right. But it is what it is until price proves otherwise. And right now, zooming in, we're holding barely. We're holding it. And it is a 618 retracement, 786, 618 zone. So this is why I'm not just, I guarantee it's going lower because it's still holding it. But if we don't hold 70, then the writing's on the wall, just short and sweet. We don't hold 70, then we're going down to 65. Highest probability. We break back above the magic fibbo. We close above that swing point. Game on. By $3 move. Break that. We're going up another 2 to 3, $4. We break 80, 83 range. We're going to 90. But at some point, from the high to the low, everyone, from that high to that low, whether we get a low over here or a new low, like we're kind of maybe anticipating if it happens, still got to go up to that 100 range to test it. So pay me now, pay me later. Oil will go up to that target at some point. Or maybe lower, then test it, or we just start finally breaking out. Gold. Be careful with gold. We kind of reached the 2,900, 3,000 zone that we've been talking about. So this could be the beginning of a bigger correction, or we could get some blow off top. Guess what's coming? They're going to audit Fort Knox. The last time we had physical proof that the public knows of was back in 1974. So they're going to go audit with the Doge to see if we have any gold in the reserves. And there were rumors that planes were flying in gold bars and before the big audit. So maybe gold gets a big flush off of that, or maybe it gets some real big pop off of this thing when this goes down. But be careful. We've reached extensions. We reached extensions upon extensions, right? 272, 2618, right in that zone on that bigger move. So this is exhaustion. We need the correction. I said a while back, we're going to 29, 3,000. I said, no doubt we're going to get there. We do need a correction. Is the correction a daily retracement? A magic fibbo to then go higher? Or is it maybe a little bit deeper and then we go higher? So I'm not saying once gold tops up here, that's the last time it'll ever be that high. No. But corrective action, look at that run. I'm tired looking at that run. You think gold's exhausted. I'm exhausted looking at it. So, Mr. Tucson, the bigger the dip, the more I like it to buy it again. But I would not be accumulating a big new long position way up here in the high 2,900s and above. You might get a small little pop, but we're overdue for the correction. Several reasons. We didn't even come back to the magic fibbo line when we corrected and went up on this big run. We haven't been back to the fibbo line in a very long time, way back in February. So that's been quite the run. And you don't run off forever from the magic fibbo. It comes into play over and over and over. It will come into play. And look at that stretch. That has been a long stretch. So it is absolutely screaming for a big correction to come back down. And right now, you're talking about a $300 correction. That's pretty sizable, right? About a 10% correction. If we're up at 3,300 bucks, come down in this range. If we get to 3,000, might be a little closer to 350, 400, but be careful. Yes, this could go a little bit higher, but this is where I wanted it to be. And I want to see some sort of correction. Love to see a beautiful three-wave correction come back down to this Fibbo level, to bounce and continuation. Do I think gold's going higher than 3 and above? Yes. Do we have to get there before we get the correction? I think less likely we're going to get there before we get the correction. But if we get to 3,000, be expecting it. And if we don't, and Randy and others, maybe this 29 and change, what was that, about 29? Let me get my crosshair on there. This high went to 29.42, and this one went to 29.40. So we went to 29.42 on this platform. We didn't reach 3,000. I promised we would reach 3,000. We're going to. Are we just going to continue to get there? Then we correct, or are we going to correct? Then we get there. I like the big correction first. Because if we come down to 26, whatever, 27, 26 or lower, then you got to go that much further to get back to 3,000. And this has been quite the run. That is parabolic. And typically after a parabolic, you need some sort of retracement. And look at where that would put us. Just at a 618 retracement from this recent low to that current high, 26. Confluence of events, Randy. We go up, we correct down toward the magic Fibbo. This thing continues to, slice upwards because of that big run. And we come and do a 618 retracement, and we get the combo meal, a measured bounce and a magic Fibbo combo to set the tone. We're going much higher. That's what I'm looking for at some point. And those extensions would go up into 32, 3,300. So how would we do that, Randy? Alan? I'm going to take a lot of this off at the moment so I can show you what those lines would look like and how beautiful they would be. I'm going to take this off since we got that big run we were looking for. And let's see if I can take this off over here. Well, that goes way back. But let me go to a weekly. That'll probably do it. Since this big run, if we can just get a 618 magic Fibbo retracement line, come back to the daily. Well, I showed you on the daily, but what about the weekly? Maybe we get a magic Fibbo bounce off the weekly. From that low to that high, 618, getting close, would go a little bit lower, maybe 2,200, 2,300. And this baby's sloping upwards. And we get a correction down to there. And we get a measured bounce to 618 slash magic Fibbo combo bounce. Then we can start targeting, like I said, 32, 34, 35. Looking good. And if you use the 3-point tool, kind of give you confluence of events, 3-point tool, what if this is the low, this is the high, and we come down here to get that 23, say 2,400, 20, right there. We get a magic Fibbo slash bounce. Then look at what we're shooting for. Again, up here, 35, maybe 4,000. See the lines? So from that low to that high, we get a beautiful bounce, magic Fibbo slash measured bounce to 618. And it sets the tone. We could go up here to 3,500, 3,600. That's my 1448, 1272. Uh. So yes, I'm bullish gold long term. I've said that for many years now, and I've certainly been saying it this past year, and I'm saying a continuation, but we need a correction. Why do we need a correction? Go to gold. We need a correction. Do we ever need a correction? My daily's overbought. My weekly's overbought. My monthly's overbought. Amen. So, Randy, I can assure you, Mr. Gold is going to take a big one. Next question is, do I think we're coming all the way back to Magic Fibbo on a monthly? Probably not. A weekly? More likely into the mid 2000-ish range, but certainly we're due, past due, overdue to come down to the Magic Fibbo on a daily, which is roughly about 2,600. Any questions? So if you've been in the gold bug and you made lots of money, be sure you're putting some profit on the side for some big trades to come because we're due for that correction. I had all of the software plus reaching these extensions, extensions upon extensions, and we haven't visited the weekly until October 23. We didn't reach the daily since February. So we're long overdue to come back. Everybody feeling me? So be careful with gold, or it could be the beginning of a top in reverse when get the correction. And I would say my first target, once we start truly correcting, is going to be down here toward the Magic Fibbo. So about 300 points or more. Could we go up to 3,000 or so? Yeah. But before we start getting to these 35, 36 and extensions way up there, I clearly see a correction back to at least the daily Fibbo, maybe the weekly, before then we get up there. All right. What about silver? Silver's wrapped in a coil and it's about to explode. But do we get a flush first? Does gold and silver flush down first? Man, you talk about salivate country. If this thing can't go breaking out, look at what we're stopping the tracks right now. We're testing yet again. 618 tried to rally, failed. Tried it. Ugh. Is it going to do it? Well, maybe. We start closing above that 32, 33.50 area. Basically, this swing point up here. We close above that. Then we can start targeting 35, 36.50, maybe 38. Do I think we're going to eventually get there? Yeah, I think we're going much higher. I think SLV, for example, Alan, this is a great opportunity long term to buy, go to Costco and buy a big silver bars and hold them. And while you're at Costco, you can get some other good things like my coffee drink in the deli or whatever else. But from this high to that low, we already took out the 618, closed above multiple weeks, not only daily, but a weekly, even I think a monthly candle. Let me check that out real quick. Can we get a monthly close above 27? I believe so. Last month, I think we're above it. Let me zoom in here. Yeah, we got a monthly candle close, prior month above it. So that tells me that we are going to eventually reach 60 and 72. From that low to that high, we closed above the 618. That says we have a 75% chance we're going to grind up there. Could take years, or at least the rest of this year and some, but we should head up here. So I can't wait as you're still with us a few years down the road and go, remember when we talked about it going to 60, 72? Well, look where we went to. Now, are we going to get another correction first? This is salivate country. we start coming down to 26, 25 or lower, man, that is just screaming more than double to get up there. So I think we're definitely going to reach these targets. This year, that's a tough one. Maybe not this year. I did say last year we were going to get that silver to run the 35 by year end. We hit it and then it reversed big time after hitting it. Well, I still think we're going to get up here. Do we dip a little bit more before we stair step our way up, or this thing just takes off? Typically, as we get closer and closer, the end of the goal run, silver typically blast off to catch up. Silver is way underperforming. Look, from the high to the low, silver is nowhere near new highs, right? We're not even close to a new high yet. But gold has surpassed not only new highs, all-time highs, it's already reached some big extensions. Look at the difference in this platform, silver, where we have a high and a low, and we're nowhere near the high yet. And even though I'm anticipating, not predicting, but anticipating, I leave the prophets to do all the predictions. I'm not a prophet, but I anticipate we're going to go up here. Yeah, but look at gold. We long since broke out from the high to the low. We reached the 1272, 1268. We're pushing up here near the 272. Big difference in this chart and silver. Silver is way underperforming. So it is like a coiled spring ready to explode. And based on SLV, which is already giving us what we want to see, we're going to 60.72. Now, Gary, does that mean I should just buy every day because it's going to go straight up? Absolutely not. This thing could flush down to the 25 range. If you see it at 25 or lower, that is salivate country. Because why? Because from 25 or lower, we're going to more than double when we get up there. Amen? The toughest part is not telling where we're going. The toughest part is, well, how long is it exactly going to take for me to get up there? Well, you buy shares and you don't have to worry about expiration as far as, using contracts and having expiring time decay. You can buy shares. Yes, if I buy SLV and just hold it, then I pay about 0.5% and a fee right there, expense ratio, 50%. Everybody see it right there, 50%. Right there. Let me bring that up. Now you can see it, 50%, 0.5%, not 50%, 0.5% expense ratio. So what does that tell me? If I buy and hold shares until I sell them up here, it's going to cost me a little bit of money because I have to hold it. That's why you can just buy silver outright and there's no expense other than lock it up in your safe or lock box or wherever you keep it. But this baby is going up here. In my humble opinion, no ifs, no buts, no ands, silver is going to be up here. But is it by the end of 2025? Maybe. When silver gets going, it won't take long to put it right up there, right? I like using this little arrow tool. And just when this baby finally started breaking out, didn't take that long, but that little breakout candle, even if you take it from the top of that to breakout, what does that look like? Come over here from where we are, it puts us right in that zone. We dip down here to 25 range, just a touch lower, that's 22. 23, 24. So we come down about 25. Where does that put us, Alan? That same little breakout, boom, is going to put us right into our target zone. So what is the percent chance we get up here? I'd say there's a 100% chance on, well, 1,000% chance on 100% scale. That's how confident I am we're going to get up there. But the only question is it 26? Is it 20 into 25? Is it 26? When is it? That's the tough part. But is it going to get there? Yes, in my humble opinion. So, in closing on silver, could we get gold to give us the rollover and it comes back to the magic Fibbo line? If gold drops and does it, it's going to pull silver down, and silver could definitely come into the 25 or lower range. Maybe we even come back toward the magic Fibbo on a monthly chart. That would be ideal. In that mid 20 range to bounce off of that to set the tone, we're going up there. But again, it only takes a few months. When silver gets ripping, we could be up here in a few months. So I won't say it's impossible that we get up here by year end. Maybe. But that's why you buy and hold until you get up here. And the more it dips, the more you want to go. Because what if it comes all the way down and just a shocker? It plunges down to $20. Back the truck up because now we got a triple coming. 60. Right? So what could we get a nice hearty pullback? Yeah, if gold rolls over, then silver's probably going to be dragged down and we get the two. So that's why I have alerts set down here. Silver gets to 25 or lower, I want to know about it. I can start adding to my position for my longer term target up here at 60. All right. I know we've been here a long day, but I got a lot to cover. Let's cover crypto real fast. Bitcoin is still struggling. Maybe we need that flush, right? Crypto market is struggling right now. I think they're imploding on themselves. I don't like the fact of right here, everybody keeping score with this number right here. I think they're insane. Launching 11, they like release new cryptos every day. It was just a few months ago, we only had about 2 million, 3 million. Now we got 11.5 million cryptos. 99.99% of those are going to go to zero. Trash. Bitcoin is the king. It is the one that has 60% of the market. Ethereum's underperforming right now at 10%. The two combined is 70% of all of the crypto market is just two coins. So if I was to buy into these altcoins, this could be hurting the picture. They bring in too many things on too fast, and it might be hurting the picture. But if I was going to try to buy any type of crypto right now, cryptocurrency, go to that one, I wouldn't mess with anything out of the top 100. Right? If it's not in the top 100, I wouldn't even look at it because there's just too much garbage coming out. There's so many of these things that are just meme coins, this, that, and the other. But anything outside, I own a little bit of this guy. It's doing terrible right now. Crypto in general. But outside the 100, I would not be touching. I have some Maker. I have some of these in here that I've had in my retirement account. And I'm looking to continue grinding. But the big catch was back when I said, let's go to our crypto over here and go to Bitcoin. Remember when I talked about this, James, when we were down here at 15,000? And I kept saying over and over, man, Bitcoin at 20,000 or lower is an absolute steal. You get down on your knees and thank the heavens I had an opportunity to buy Bitcoin at 15,000 or 20,000 or lower. And even as it went to 25, 30, I said, that is still a really good deal. Well, we topped out at a little bit over 100. Now we're pulling back. This consolidation has been in a tight zone for like 14 days. I think this is day 14 in like a 2% range. Look at that. Nowhere in basically 2 weeks. Nowhere. So I'm still thinking we probably need a flush before we bounce and go up. And there's a lot of people thinking if we break 90,000, Elizabeth, I'm coming to join you, honey. It's over. So maybe we need to flush down here into the 70s to really get those 90 people freaked out. So everybody starts bailing while then people are buying before the next push. I still think there's a high probability, extreme high, that we're still going to grind higher toward that 150 to 175. I've said it hundreds of times, and I'll say it hundreds more. This isn't over yet. And every time in the past history, when you get your all-time highs to your crypto winter low, Bitcoin has at least done a 1618 retracement. That's 175. That's why I still think we're going to minimum 150 to 175. And yes, we might even get a deeper flush. It's volatile. Look at these big runs. Bitcoin, it doesn't look like much, but you do a percent on these things. These are big 20, 30% decline. Big declines during the big crypto run. So we're due for a bigger decline before we get higher. Maybe this thing just takes off. But remember what I told you when we're back at 15 and 20,000, I was like, God, this is a steal. This is the time to buy. If you'd have bought Solana down in $8, $9 and it went up to 250, a lot of these, the time to buy was here. So what are we learning? Every 4 years, we top out on a crypto high. That was back in 17. Then we topped out in 21, and we're topping out 4 years later in 25. That is this year. Then we get a crypto winter low. And about every 4 years, we from 17, 18, we topped out right here in 22. 18 and 4 is 22. So when should we start bottoming out the next crypto winter? Before the next halving in 2028? Here's my halving over here in 2028. So we're going to top out, in my humble opinion, somewhere between 150, 175. Could be higher, but I still think this is the zone. And then we're going to get a crypto winter low. So probably sometime late 2026, maybe early 27, we look to start buying. This was the time to buy. This run is almost over. Harold, even though I'm still bullish saying it's going to 150, 175, look at the run. We went from this to 100,000. That's the bulk of this crypto bull run. I do think there's a little bit something left. Sure, a little bit land yap to go, but then we're going to get another big correction. And sometime into late 26 is when I'm going to start looking to nibble again. And if you nibble down here on Bitcoin, on Solana, on numerous of the cryptos, if you nibble down in that area, you're sitting beautiful, huge returns on your investment. But if you were buying way up here, it just took a while till you're finally starting to see a little relief. Some of the other cryptos are not at all-time highs, so you could still be feeling some pain. So what I recommend you do if you have a lot of crypto is when Bitcoin gets up here, sell. Get rid of it. I don't care what it is. Sell it. And even if it's at a loss, get rid of it. And then, and this will be the next few months or so, when Bitcoin gets that 150, 175, it is time to unload all your crypto. I'm going to be unloading everything. My Solana, my Curve, all the things I do own, whether I'm at a win or a loss. Bitcoin's up huge from down here. Solana's up huge. So a lot that are up big, but some may not. But that's what I'm warning you. If you're crypto in it, be sure when we get up here, Alan, you get rid of it. And then we'll look to nibble when we're getting into low 26. So I thought we did a pretty good job over here, more or less calling the bottom. And then when I started to see price action manifesting, you heard me say hundreds of times, anything below 20,000 on Bitcoin, buy it. It is a steal. Anything below 25, 30,000 is a tremendous deal. Now you see why. And I don't think it's over yet. And in closing, every time we got a crypto winter low, and that's every halving. This is number 4 we're in. We had halvings before here, and a halving in 16, a halving over here in 12. Every crypto winter low to the time you topped out on the bull run high, Bitcoin has done at least a 10 to 20x. So what does that give us at the 15,000 low? 10x, 150. That's where the 150 target comes from. And if you use your Fibonacci's, from every high to low, we at least do a 1618. From that high to that low, where did we go last time? 1618. Bingo. See it? So from this high to this low, the current bull run we're in, my 1618 is at 175. That's where my targets came from. Again, I don't lick my finger and put it in the air and go, oh, where do I feel like we're going? Which direction is the wind blowing? It's based on solid fundamentals, logic, and obviously the software and my extensions. I use these tools in combination with the software. So in closing, could we get a flush down to the daily? I would like to see it. But Gary, I thought you wanted to go to 150, 175. I do. But all of this corrective slop overlapping chopping action, we typically need, right, Randy? Randy's all up into ABCs, 1, 2, 3s, but we typically need one more flush below the last swing point low of the corrective action, one more flush lower. That could bring us down to the daily EMA, or we call the magic Fibbo line, and boom, that sets up the surge to 150, 175. Keep an eye on this 120 area. When we finally start breaking 120 and higher, I think our miners are going to go insane. Now, because of crypto, there's a lot of people talking about, well, all of that mining power they have is very specific about what they use. They'd have to buy new equipment. But as far as that, they're talking about some of them go, well, we're going to stop mining and maybe we go into AI. AI, yeah, that's the new crypto. We're going to go into AI. Maybe. But that's why I'm big on Mara, BTBT, Bitto, Riot. All of these miners are in this scenario now, but they may not be around this next halving event. So if they hold and they maintain, like Mara did through the previous one, and it's in this one, if they continue to hold, then sure, we'll do the same thing. Back in 26, when we get these crypto winter lows, we'll start piling on, buying Mara and some of the miners going into the next halving. But some of these guys may not be around on the next cycle. They may try to flip over and do some AI or whatever. So be careful. This isn't a buy and hold and donate to your grandchildren on these minor stocks. They may not be here. There is risk at trading them. I'm in big with Mara, Bitto, BTBT. I have hundreds and hundreds and hundreds of shares. And when am I going to bail on all of this? We're up big on Mara. We're up big on BTBT. I mean, we were up much bigger during the pullback, but I'm going to bail on all of that when we get up here to 150, 175. So I'm going to remind you when we finally hit up here, hey guys, time to unload. But you should see Mara and these miners go insane and start ripping higher when we start seeing Bitcoin about that 115 to 120, between 115 and 125. So I'll say 120,000 and higher. The profit margin goes through the roof for the miners. And I think that's when you'll see a lot of that surge come in. So I'm still holding, even during these pullbacks. If we get Bitcoin to pull back, we get, the only one I'm disappointed in has been what? Ethereum. Ethereum's just not participating. We've got to break. This is not looking good, Randy. I mean, as much as I like Ethereum, and I think it will go higher, we got bogged down in that 618, 786, the last swing point high to low. Bitcoin broke out, went to extensions, and we're still expecting to go up to the 1618 up there. So far, Ethereum has been underperforming. It would rally into that resistance zone 618786. Stop, 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 stop. So I get very bullish when we start closing above 4,000. Then I think we will go on to all-time new highs. But this flush is what I was looking for. I would have preferred it flush just a tad bit more to make a new swing point low, because then that kind of sets up all this overlapping, chopping goop action to set the tone for more upside. So maybe we need one more flush, Bitcoin flushes, Ethereum flushes, then we go bouncing. But I do own Ethereum and I do own some of this ETHU. I bought ETHU in that $4 range. We're right back in it. So what if we get the flush? I have some junk bids down here at $3, $2. So if we get that kind of flush, then it rallies. What if it's a dud? This thing could take off. We need Ethereum to take off. It's like Bitcoin has already done it. The Bitcoin ETFs, et cetera, have done very well. And I suspect they're going to continue to do a little bit better when it rips. This one is like silver. This reminds me gold and silver. Gold went on to make all-time new highs. Bitcoin made all-time new highs. Silver did not. Ethereum did not. But I still think based on the rule, we still should go up here, if not much higher. I'm pushing more toward this 1618 before it's done. And it is leveraged. So once Ethereum starts breaking out, this thing is going to take off. Well, we did well. We bought down here at $4 and it went to $12. Hopefully you took some profits on that. I don't let my investments double, triple, and quadruple and do nothing about it. But now that we're back here, I kind of warned you we're probably going to get another push lower. This was the zone. Look at where we're sitting. I drew this a long time ago. Could we go lower? I will add to my position, right? I'm back in it at these lows. And if we get the run up, maybe we just get back to 12. That's still a quadruple from 3 to 12. That's a 4X. I like it. Could we get up here? Yeah, that's the plan. But if Ethereum doesn't participate, then ETHU is not going to participate. So there is risk. So that's what I say. I think it's definitely going to eventually break some highs, but Ethereum screwed it up from proof of work to proof of stake. They switched over. Proof of work is what Bitcoin is, not the stake. And this is all about staking. Well, doesn't mean it can't go higher. I think it is going to do well in the future, but I'm just disappointed it stopped in its tracks where, you know, my rule, if you get these type of things and it bears down and you start taking out the low to the high of 618 to the downside, this thing could go into single digits. Ouch. That would be ugly. So worst case scenario, maybe we get one last little flush to make one more new swing point low, barely. I'm not talking about way down here to about 800 or something. No, I think we go and start breaking below this little bottom zone here. The door's ajar to go to single, triple digits anyway, 9, 8 range. Ouch. That's not conducive to getting up here. So we start to see Ethereum breaking 4. That baby's going to go to the moon. ETHU, we start breaking 4 and rallying. ETHU is going to go to the moon. And that target around $30 is like a gimme. That's only if we get Ethereum to do it. I'm still leaning that way, of course. I still own it. But I bought low, I sold high, I bought low. And I think even with the Bitcoin running to 150, this thing's going to catch some sort of bid. And Ethereum should catch some sort of bid too. So we shall see. But man, if Ethereum could break 4,000, game on. We're going double, triple, quadruple, 10x from $4 or even lower to $30, $40. That's what I'm hoping happens. And that's not the best strategy, but technically speaking, if we can break 4,000 on Ethereum, this thing is up here, given. No ifs, no buts, no ands. And it's worth the risk of having that, because my other investments have obviously paid out, Bitcoin, etc. So take care. God bless you. We love and appreciate you. That's it. That's all. We'll see you tomorrow.